Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Waste Management, ticker symbol WM. Waste Management has been my best performing stock year to date, and that's because it's so defensive and it's such a good stock in terms of not being affected by the overall broader economy. If you don't know, waste management is obviously a waste disposal service, and this business is very strong. I mean, over time, it gradually increases, not at the same rate as some tech companies that are able to achieve unbelievable growth. It's obviously a very slow business. There's a lot of investment that goes into it, but it slowly grows over time, and it's very resilient. I wanted to kind of do another video reviewing the stock, looking at it, and deciding if I wanted to add more. I kind of think it's not time to add more because the purpose of owning these types of stocks is that you buy them when they look a little bit cheaper than what they're trading for, just because not a lot of people want to be there. They want to be in the things that are growing at a fast rate. You want to pick these stocks up when everyone else is looking for a crazy 10x or something in a bull type of market. My thesis is that during a bear market, people are going to be flocking to this. I think you're going to want to get the stocks that have been hit very hard and unjustly so. Now, that's not to say that there isn't an opportunity here and that I think that the stock is amazing and going to grow very certainly in the next 10 years. I think that this stock is going to be able to increase its revenue and continue to increase its cash flow and be in a much better place. So there is a premium that can be paid for that kind of thing. But overall, I think that right now the timing is just really bad because this stock, people want to be in this stock right now, so it's causing the actual valuation to increase above what it normally would be in the times of like a bull market. Now, looking at the actual stock, it's up 15.14% year to date. It has a market cap of $92.9 billion, a price to earnings ratio of 33.92, and an annual dividend yield of 1.43%. It has a 52-week low of 196.59 and a 52-week high at 239.32. So it's not that far off from its 52-week high, currently trading at $230.91. Now, if we look at the analyst opinions, we can see that they're pretty much split, with around half rating it a strong buy or buy, and around half rating it a hold or a sell. We could see that the analyst price targets are all over the place. They range from 191 to 262 with an average analyst price target of 239.47. And again, the stock currently trading at 230.91. And this all totally makes sense to me because I think this is just analysts kind of asking themselves, how much should this be worth? I think if the economy gets a lot worse, this is going to be worth more just because there aren't going to be as many opportunities like this to get into a company that's going to be very resilient despite the economy. But if things are going to get better, then I think that the premium for this should kind of dissipate. And I'm not really a fan of buying into something at a huge premium necessarily. But I do think that Waste Management is a very strong company. And if you're looking to hold it for at least 5 to 10 years, I think that this would be a good price. But I don't know if it's necessarily the best deal you're ever going to get if you have that time horizon. Here I have my weighted average cost of capital for Waste Management. We can see here that 20% of the weighted average cost of capital comes from debt weighting, or 20.46%, whereas the market cap or the equity weighting side of it constitutes 79.54%. We can see the cost of equity here at 6.094% calculated using CAPM, and we have a cost of debt after tax of 1.986%. And these two numbers averaged out, multiplied by the weightings, come out to a weighted average cost of capital of 5.25%. Now moving on to the DCF model valuation for the stock, we can see that they have an average revenue growth of 7.19% and an average free cash flow growth rate of 1.62%. But this is very misleading because they usually use some of their remaining net income to buy back shares. So the average free cash flow growth is pretty in line with the average revenue growth when you take that into consideration. But they like having this consistent amount of free cash flow around this 2 million mark to just keep as their free cash flow coming in. Now, I decided to use the average revenue growth rate for the growth rate of the free cash flow over the next 9 years with a perpetual growth rate of 2.5%. And that came out to a DCF per share of 139.53, representing about a 40% downside in the current share price. And I think that this is just because of, like I said before, the premium that you're paying to get a stock that's not really affected by the tariffs or the broader economy. I think that it's a very strong business that's going to grow continuously, and I think that you very well could forecast this past 9 years because it's such a stable business, and I see it continuing to grow. But do I think that it's overpriced? I think that it's pretty expensive looking right now for what it is, but I also think that it's pretty much an impossible business to get to this level. They're not really going to have a lot of competition in terms of, anyone that can compete with what they're doing at the level that they're doing it. I think that it's a very interesting business. I think that it's a very resilient business. And I do want to own more of this in the future. I just don't think that now is the time to be buying more waste management. And if we want to put in a growth rate of the free cash flow to justify the current stock price, it would have to be about 13%, which is double the average revenue growth, which I don't think is necessarily realistic at all. But I do want to say that I think that this terminal value should be higher just because I think that there is going to be sustained growth into the future. And I also think that it's a very good business fundamentally to be in, and that you're probably going to make money into the future because there's probably always going to be a premium on the stock price. So it is a little hard to say, but I will say that it makes more sense to buy the stocks that have been unjustly hit down than buy into something that's actually increased during this time. Just from my point of view, I think that long term you're going to be happier buying into something at a way cheaper cost that's going to recoup its value than to buy into something because you're afraid of what the future is going to hold. Instead of buying into waste management right now, if you don't want the risk, I would just go into a CD. But if long term you want gains, I do think that waste management is going to make up the money into the future, but I just don't think it's a good time to buy right now. Let me know what you guys think in the comments section down below. I'm really interested to hear what you guys think about waste management and the stock price in general. I think that it's currently too expensive to justify buying into, but I will say that with giving it my own personal premium, I would maybe look at it around 200 to 190. I think that that's a pretty fair price for what you're getting. Thank you guys for watching. Please leave a comment if you liked the video down below, and I appreciate you guys coming here.